Speaking of consumer credit, let's talk about bad consumer loans. They may be on the rise both here and abroad. Chris Valerio is in London with all those details. Chris?
Hey, Scarlett, not a pretty picture for these banks. You just heard Monica kind of go over this, but in the U.S., many of these banks are going to have to come up with new ways to make up for that lost revenue, given the new credit card rules. Meantime, in the U.K., here, the consumer banking picture also looking pretty tough. This morning, KPMG saying that British banks' impairments on their unsecured loans will not peak before 2010 at the earliest. It's a fancy way of saying, basically, British consumers' bad loans are not going to peak until next year. So let's talk about why. And a lot of it will seem very familiar to American audiences as well as audiences here. You have rising unemployment and declining home prices. Now, KPMG says that because of those high levels of bad loans, retail banking unlikely to be profitable in the second half of this year. Scarlett.
Now, Chris, talk us through exactly what this means from an earnings standpoint on both sides of the pond.
Yeah, you may remember that both in the U.S. and the U.K., the retail banking side of financial firms has really struggled. We learned that quite a bit during the earnings season. The investment arm is what's really sustained profit at a lot of these banks. Now, KPMG thinks that this is no longer going to be the case. It estimates that revenue from selling and trading loans and bonds will fall. So think about the size and scope of that. Let's talk about that. How much does it really matter? Well, in the U.K., HSBC, Royal Bank of Scotland, Lloyds and Barclays, total impairments climbed to $50 billion in the first half of this year. Last year, it was just $17 billion, and that was for the whole entire year. Meantime, in the U.S., consumer banking profit, for instance, at Citigroup, tumbled 78% in the last quarter. We even had, and you know this well, but J.P. Morgan CEO Jamie Dimon last month predicting more losses on consumer loans and boosted its loan loss reserve by $2 billion in that quarter. So certainly, if KPMG coming out and saying, this is certainly going to affect the bottom line, at least in UK banks, you could see the similarity that we would have with U.S. financial firms that are in a very similar situation. Scarlett.
Thanks very much. Chris Valerio over in London.